Go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, returning guest of the show and our friend of the show, Vick Aggarwal from the Kinsa Capital Management. Vick, how are you? So good to have you.
I'm very well, thanks, Rocco, for this opportunity, and good to be back. Right,
Vick, massive news. Great to be in the financial industry. So many stories, so many narratives. I know we don't really like to look at the stories and trade based on them, but they are very interesting. We had the Pandora Papers. Recently, we had Jerome Powell talking about tapering and inflation targeting and sort of those things. And without any of that happening, we had in the last 3 weeks a 6 to 7% correction in US indices. And I thought it was a good idea today to basically unpack, okay, cool, from a technical analysis perspective, what exactly happened? Maybe looking at INQ, S&P, Dow, maybe whatever you want, and then try and explain in layman terms, like, because 2 or 3 weeks ago, the comments on LinkedIn were hedge accordingly. So it's something that sort of, there's a high probability, and I'd like you to unpack it for us.
Yeah, of course. It's a $1 billion question, right? Which everybody has been talking about, writing about, and they have been kind of predicting as well for months, maybe since Corona crash as well.
Yeah.
But you see, the truth of the matter is that nobody knows exactly, to 100% sure, whether this is actually a correction or it's going to be a huge crash or what it's going to be, right? So as an analyst, technical analyst, or a trader, or as an investor, all you can do is just keep your eyes on the road ahead, right? That's all you can do. So what we can see is in past 3 weeks or for near about month, which was the September 2021 month, there was a little bit of movement downwards, right? Now, if you watch these movements on higher time frames, I'm coming from technical point of view. So if you watch them higher time frame, say look at the monthly time frame or quarterly time frame or those sort of time frames, or at least weekly time frame, which you should be looking, everybody should be looking at least. What you can see is that there have been a little bit of sign of weakness, right? The candlestick formations and all that, they actually tell you that the market could be leading to something, right? But that something is kind of indication. Now these indications may not lead to huge movements or anything like that, but that's all you got, right? As an investor or as a technical trader, these are the indications that you're looking for. Now these indications, some of the examples were this is the one that I posted a couple of weeks ago on Dow Jones, right?
Yes.
So in this case, I was able to notice that for past few weeks the market was creating very small candles, and it was kind of going sideways.
Yes.
And I used 10 moving average and 20 moving averages and few other things in my arsenal. So what I could see that US 30 Dow Jones was the first time it was trying to close below 20 moving average.
Yes.
Now it has not been able to do that since November 2020. Now, I'm not saying that this is something which is going to create some some huge move, but it is something that we should be watchful for, right? And if US 30, which is the top 30 companies, if it is trying to do something like that, maybe it can have a little bit of impact on Nasdaq and other indices, maybe a few other international indices as well.
Yes.
So these are the subtle indications that you're looking for. So when I started looking into US 30, and I found that I started to look at some of the constituent stock prices. So I looked at Google. Now, Google,
your fan index is right, and that's what you mean when you say you look for market weakness.
Yes, exactly. Right. So you look for the market weakness, and then you start to expand on that. You start to see, okay, what kind of evidences we have, right? These indications can come from your own experiences, fundamentals. It can come from your indicators. It can come from variety of things, right?
Yeah.
So in my case, I started to look into constituents of those things. For example, in indices, I will go into top stock prices.
Okay.
So for example, I looked into Google, and then if you look at the monthly chart of Google, there have been 8 straight bullish candles.
Well,
Google, right?
that's almost a sequence.
Almost a
What I know in TI is a sequence.
Exactly, right? And it is like kind of parabolic move, right? Because it
Yeah,
has never been able to go below 10 or 20
yeah,
moving average and
yeah.
all
You
that.
stairs up, elevator down.
Exactly, right? So when September started, started to print a little bit of those candles which were showing little weakness, which was showing, okay, maybe I do not have that kind of momentum left
Yes,
to print another month
yes,
of bullishness,
yes.
right? So that was one of the things. Other things, if you go to other indices, buckets, for example. So I looked into FANG, which was
Okay.
Facebook and Netflix and all whatnot, right? So FANG index was also showing a little bit of weakness. I know that it has gone back up a little bit. It went up, but again, it was creating a bearish kind of pattern there. So all of these things, little things in there, they started to show me that there could be some kind of weakness coming in the market, right? This is the
Yes,
thing that which could be happening. Now, having said that, do you know it is going to come into a scenario of crash? Nobody knows, right? Until that happens, nobody knows, because if you look at the higher time frames, the market are still bullish, right? And we must stay objective in the market, right? We
yes.
cannot just predict that the crash is definitely going to happen or it is definitely going to go to new highs. No, just stay objective, look at your indications, put weightages on it, and control your
Yes.
risk. That's all you got.
Yeah, which leads me
Right.
to
So
our next question, because I wanted to ask you, do you think the moving averages hold this time? Because even to me, when I look at higher time frames, I'm cautious because I see more downside or possibility of downside. Um, I know you're not a big fan of buying the dip, as we say, or the industry says.
yeah, yeah.
What does your gut feeling say from years of experience in the market?
Right, gut feeling is actually preventing me to take it's preventing me to take any kind of action right now, right?
Yeah.
So I'm
So,
I'm I'm
so,
I'm in
so
the I'm
basically, that would be sitting on all cash.
yeah, simply sitting on the cash, because at the moment, because there are things which are, as I said before, there are things which are a little different this time, right? Again, I'm
Oh,
not trying to
really?
predict
Okay, yeah,
anything.
let's unpack that.
Yeah, so some of them, as I said, the weakness in the market, the candlestick patterns and all that. And from
Yes.
technical point of view, if you look at the moving averages, 10 and
Okay.
20 moving average that I mostly use. So
Okay.
weekly candles have been able to close below 20 moving average on US 30 Dow Jones, and right now the Nasdaq is below 20 moving average. It's hovering around 20 moving average. We have to see whether
Yeah.
it actually closes below or not, but that's where it is.
Yeah.
And so far it has not been able to show that kind of weakness so far. Okay.
Yes.
So what so when you are in the market, right, at this moment in time, yeah, so at this moment in time, all you have to do is just think in three scenarios, right? Right. So the first one is if you
Yeah.
are long right now, if you're
Yes.
already long in the market,
Yes.
right, you should be watching this market very, very carefully, because if it starts to turn, then you should be waiting to see whether you can actually get out, or take some partial profits or start to manage your positions, right?
Yes.
That's first thing. If you're thinking of actually going long, maybe this is not the right time to do that, because if the market starts to correct, right,
Yeah.
then maybe you
You're
should
going
wait
to
for
be
the
in a world
correction
of
and
pain.
some stabilization.
Yeah.
Exactly. And the third one is that if you're looking for a short in the market, right, and if you want to short the market, then
It might be
also
too
then you
late.
should not be doing that. It might
Yeah.
be delayed, right?
Yeah.
You never know. Maybe this is nothing, right? Maybe this is just a blip. Maybe market will go down a little bit, in a few more percentages, and then it will go up. So you need further confirmation, because the market is still bullish structure wise, and it can still go up. So right now, for me, it is no action time. I'm just
Yeah.
waiting and watching,
That's the best
right?
advice that you
And
can give, because no trade is also a trade, right? Inaction is also action.
exactly, right. And
It's not a setup
so
that
if
it's not a setup. It's not a setup. Sorry, it's not a setup that you like. So I mean, that's it.
exactly,
It's as easy as that.
exactly, the best setups, you must trade the best setups and trade what you see, right?
Yeah.
You should be objective in the market. You should look at the indications and put the weightages around it and control your risk. So
Right.
right now, for me, the controlling risk is basically stay out of the market, just watch it, and then if the moment gives me, if the market actually gives me good opportunity to short, I'll go for it.
Yeah.
If it goes long, if it gives me long confirmation, I'll go for it,
Yeah.
because as traders we can make money on both sides.
I'm with you. So give me one or two sectors or asset classes that you do see like maybe a good setup or a favorable setup in?
Yeah, sure. I've been watching DXY dollar index for quite a while, and I've had bullish stand on dollar index since 89 level, and it has reached one of my profit targets here. So I'm still watching that because that can still have a lot of potential there. But other setup that I'm very, very closely watching is silver. Silver is a very good game right now because it is right at a crucial level, which can act as support, obviously. And but
Okay.
what I can see from my technical perspective, technical analysis, is that the upside can be very limited. It can probably right at the moment it is around hovering around $22, so it can go to 23 at the most, 25 or so. But the downside, if this current support level is broken, then downside can be huge. It can go
Yes.
down to 18 or 17 or even 15 level as well. There is a specific point at 15 which can be which can actually pull the price down. So silver can be very, very good, something to watch out for, because
Yeah.
having said that, I know that a lot of precious metals or commodity traders probably will not agree with this, but I'm simply looking at that. I'm simply looking at my technical analysis,
Yeah.
and this is the probability that I can see. Having said that, I'm always bullish on precious metals long term. So
Yeah.
if the silver actually falls to any of those levels, I will heavily buy that again.
Yeah, Vic,
Right. So
thank you
that's
so
my
much. Thank you so much for joining us. If the listeners want to connect with you and catch up with everything that you're doing, where can they find you?
Sure. Yeah, I'm available, as we can see, on major social media platforms, on Twitter, LinkedIn. I'm very active on LinkedIn, and I'm there. You can also find me on YouTube, as we can see.
Ladies and gentlemen, superstar analyst Vick Aggarwal from Vick Capital Management. Thank you so much for joining us. To our listeners,
Thanks for having me.
peace, love, and prosperity, and we'll catch you in the next one.